Welcome to Outlook on Colorado, a conversation around the table with Dr. Mary McNeil-Jones and Sandy Thompson. Well, hello, Dr. Mary.
Hi, Sandy.
How are you today?
I'm doing okay.
Well, we have a very special show, a very special guest, and we would like to welcome Mr. Brian Arnold. Welcome to Outlook on Colorado.
Well, thank you. I'm so glad to be here today. I'm excited.
Yeah, so are we. We have a lot to talk about. Mary, what are we going to talk about today?
Well, we're going to talk about reverse mortgage. You know, I'm under the impression, and a lot of people have told me, that especially baby boomers, who is very prevalent in this time, has not prepared effectively for retirement, especially baby boomers of color. Mm-hmm. And that's because a lot of the baby boomers of color did not get the education as a young person of how to prepare for retirement. We didn't even think about retirement. All we were doing was trying to live day to day. Mm-hmm. And so now here we are, and I'm past baby boomers, so I'm really different. But now here we are as baby boomers, and we're trying to survive. We want to still enjoy life, because this is the time where baby boomers should be able to take cruises and do whatever they want to do. And we want to enjoy life. And there are some baby boomers, let me say this, that did prepare and are in good shape. But there's more baby boomers that didn't prepare than there is to prepare. So we thought it would be good to invite Mr. Arnold here to talk about the pros and cons of reverse mortgage.
And yes, and Brian, you're with Open Mortgage. You're the branch manager there.
Oh, yes, ma'am. I'm sorry. Yeah, I am the branch manager here in Denver, Colorado. One of there's about 3 or 4 of us that are here. I used to work with a company called AAG, which is a company that you're probably familiar with that has commercials with Tom Selleck on it.
Yes.
Yes.
And was not able to work in the capacity that I really wanted to as far as helping our community. And so that was super important to me. So I left AAG and went over to Open Mortgage, and just have, been having a great time helping folks. And that's where you really think about where it matters and it means the most, is how I'm going to help our community. Just like Mary was saying, when you think about retirement, there are, 10,000 people a day in our country turning 65. And that's going to happen for the next 15 years.
Wow.
And it's just amazing. And you think of things, back in the past, like redlining and not the ability to create, wealth through generational wealth through homes. And then going, okay, so now that we have begun to do that, how do we, pass that wealth on to our kids and our grandkids? And, in the 2000s, when I started in the mortgage industry, it wasn't as big of a deal to me as it is now that my kids are grown and I have grandkids, mm-hmm. and I'm really worried about their futures. And,
Absolutely.
How they're going to be able to, have this thing. How do I transfer wealth if I do pass away before they're older, to make sure that they have a hand up?
Right. And another thing, we're living longer now. Mm-hmm. And I was reading from some information, and it says most Americans in their 60s have only saved 47% of the minimum they need to retire. 47%. What about the rest of it? And we have to decide and make choices. I was telling them at church yesterday in a meeting that I was in, that going into the age that I am, I have to make decisions on certain things that I never even thought about. And some of the younger people who's turning 50 now, were in our Graceful Women's organization, and when they're 48, they're supposed to convert from Young Women's Christian Council to Graceful Women. And they were saying that turning 50, they are facing things that they never even knew existed. And so it's very important. We talked about trust funds and different things that's important that we don't even understand. And so I think this is a very good subject that we can talk about. And of course, Sandy, what is the email that they can contact you, or either the number they can call the station so that they can get more information if they need it?
Yes, it's 303-481-1800, and if you extension 171, and if you call and leave a message, we can get you right to Brian, and he can help you with that reverse mortgage, or he can help you with all of your mortgage concerns.
Absolutely.
Absolutely. And would love to, even if it's just a discussion and you're not ready, or you're just wanting to get more information, because I'm finding with families, it's a family decision at some point. You know, when you think about, you know, equity in your home and equity lines of credit, and, you know, do I need to refinance? And then, you know, you look at interest rates right now that seem to be skyrocketing, and when are they going to come down? And, you know, the bottom line really is, how am I going to live my retirement years in the I guess what I'm accustomed to, or what I've been living, and without having to take a big hit? I've been spending some time in homes in the last month or two that have just been, it's sad, because we're, you know, as interest rates have gone up, the price of gas has gone up, and the price of food has gone up. And, you know, I was at a home the other day, you know, Social Security hasn't really gone up, right? So all these other things have. And so, you know, where a Social Security check was maybe $1,400 a month or $1,100 a month, and, you know, the person still has a mortgage on their home that's just, maybe it's $800 or $900 a month. So you pay your mortgage at $900, you have, you know, $1,400 check coming in, so that's $500 to live the whole month. You start spending on some gas, you start spending on some food, and all of a sudden the money is short, and it's not there. And folks are going, well, what am I supposed to do? Because there's no more money coming in. I'm not going back to work. You know, I don't have the ability to do that. But they're sitting on a home that has, you know, that's worth $650,000 because of Colorado inflation and everything else, and home prices are at a great spot. They owe 120 on it, and so we're able to take out some of that cash for them to be able to do. And so the premise of the reverse mortgage, and this started back in the Reagan days. So Reagan put this together, where seniors would be able to take advantage of their equity in their home for the purposes of, you know, being able to live a little bit better. And so about 50% of the equity is available to use. So if it's $1 million home and you owe 500, you know, at 500,000, and then that means 500, you know, there's 500,000 of equity to use. So if there was, you know, $1 million home, 500,000 is the equity that you can use, and you owe 200, that means we have $300,000 that we have available to use. The biggest premises of the reverse mortgage is there is no payment. You still have to pay your taxes, you still have to pay your insurance, but as far as the actual mortgage payment, we take that away, and there's no payment until the person passes away. If it's a husband and wife, there is no payment until both of them pass away, and they can live in the home, you know, until that time. So the reason they call it reverse on a traditional mortgage that we normally have, we're used to making a payment and our balance goes down, and then eventually in 30 years or whatever it is, most people never have their loans 30 years these days, but if it did, you would have paid off to zero and you would owe no money. On a reverse mortgage, you take out in that scenario I was just talking about, you take out that $300,000 in cash that you have available, and then that interest rate that you're paying, and let's say it's right now it's like a little over 5% is where it's at right now, will be added to your principal balance. So if you took out 300 this year, then maybe when you look at your balance statement next year, because you're not making a payment, you know, what would be owed on the house maybe $310,000 or $315,000.
So it goes up. Is that what you're saying?
Yes. So I'm saying it goes up, and so but it doesn't come due until both people or the owner of the home passes away.
Okay.
Brian, is there different kinds of reverse mortgages?
Well, there's your standard fixed rate. There's your standard, you know, adjustable rate. The adjustable rate has the line of credit that's available inside of it. You know, we have reverse for purchase. You know, a lot of folks have said, you know, this house is too big, or I want to sell, but they go, if I sell my house, where do I go? Because prices have gone up so much. So I get all the equity out of this house, and then say in this instance, I get, I sell my home for $500,000. I owed $100. I got $400,000 left. And I'm going, where am I finding this place for $400,000 in, Colorado in the Denver area right now? Well, the reverse for purchase allows you to purchase the house for 50% down, right around there. So let's say you find a house out in this new Aurora Highlands where they're building 20,000 houses or whatever they're building over there, and the house is $600,000. I can put down $300,000 and never make a payment. And so somebody who's a senior who's 70 or 72 and wants to move into, whether it's downsizing or just a different house, they can purchase it after selling their house for 50% and still not ever have to make a payment again. So they don't have to worry about making that payment again. They got to pay their taxes and their insurance. There's 4 rules on a reverse mortgage. You have to live in the property, so you can't use a reverse as an investment property. You have to pay your taxes. You have to pay your insurance, and if you have HOA fees, you got to pay those as well. And then the last thing that you have to do is keep the property up. So you can't just let the whole property go.
Right.
If you do that, you can stay in your home until you pass away.
Well, Brian, let me ask you this.
Sure.
Age, how old must I be to get a reverse mortgage?
So right now the age is 62. They do have some programs as low as 59, but once you hit that 62, you're able to get it. I did one not too long ago on a lady who was 95. Yeah, that was kind of a funny one because her son was in his 70s. She's 95. She's wanting to take some money out so she can do some remodeling. So this wasn't, where she needed the money to live. She wanted to do some remodeling. And she said, because I want to do it for my son, and her son was living with her. And so, the son's like, well, Mom, I want to remodel it the way I want to remodel it. She's like, no, you're going to remodel it the way I want to. I'm going to take this money out. So she's trying to control from the other side.
Yeah.
So, Brian, how does that work? If the son's 70, she's 95, they both live in the house when she takes out the loan. If her son was actually on the what am I trying to say, on the title or whatever it's called, would her son have to do different things when she died, or would he still have to come up with money to buy the house? What happens?
So whatever that loan amount is that she has, he would then be responsible for paying that loan off. In this case, he's over 62, so he could just take out another reverse mortgage, and he would not have to worry about it. But if the kids were less, let's say they're 45 or they're 50, they don't qualify for a reverse mortgage. So one of the big myths of reverse mortgage is the bank gets my house. And that is a total myth. It's just like a traditional mortgage. You pass away, whatever is owed on the house. So the kids have a choice. They can remortgage it, so they can, whatever that loan amount is, they can come to me, and I can help them do, a traditional mortgage if they're not 62. And then we can, but we're only having to mortgage whatever that amount is. So let's say it's 300, but the house might be worth 600. They're not having to buy a house for 600,000. All they're having to do is pay off that $300,000 balance. So we can get a new loan for them. Or they can sell the house, and they sell the house, pay off the $300,000, and then $300,000 would go to all the heirs. So that's one of the biggest myths. Now they do call it a non-recourse loan, which means if there was something that were to happen to the house, so where the house is now worth less than what the loan is on it. So let's say a sinkhole happens, or an earthquake, not in Colorado, but a tornado happens, and the house is no longer, well, the insurance would cover a tornado. But let's say that for whatever reason, the value is not there. So they owe $300,000 on the house is only worth $250,000. And so if they went to sell it, obviously they would lose money. Those kids and those heirs are not responsible for that $50,000 that the house isn't worth anymore. They can walk away, and then the bank would have to take the house and would have to take the loss on that. So
okay, so like all those houses that burned down over in Boulder, if one family member had reverse mortgage and their house is gone, and they had insurance, but the insurance wasn't enough to rebuild it, but they're on a reverse mortgage, how would that work for their children?
Well, the children, I'm not, depends on the land and how much they're able to sell that property for. So if they were only able to sell the property because, let's say, insurance didn't step in, insurance wasn't there, they figured out a reason that they couldn't rebuild, the children could walk away from that. They wouldn't get any, income from that property, but they wouldn't be responsible for it either.
So if they wanted to rebuild, would the reverse mortgage be able to help them in any way rebuild?
That would be all insurance, so based on whatever the insurance is and what they rebuilt. But yeah, there's no like additional money that's in it unless the land is worth more than what's on the loan, and then they could sell it or do whatever. But that's a whole nother world of insurance that is tough to get into when you get into situations like that.
So if someone lives with you and they are not on the title, so they automatically have to sell the house, right? They can't just live there under the same reverse mortgage.
You're correct. I mean, especially if they're not 62.
Okay.
If they're 62, then there's some things that we can do. Now, they do have provisions for like a non-borrowing spouse. So let's say a spouse was at the time when the person got the loan was 59. 10 years later, they're now 69. They're okay to stay in the house the entire time until they pass away. So there are provisions that are in there that even if they're not on the loan, they still get to stay in the home until they pass away. And so the big thing here is that the kids are the ones that end up having to, deal with the amount of money that would be added to the loan. And sometimes there's kids who say, Mom and Dad, I don't want you to get a reverse mortgage because I'm kind of waiting for you to die, and I want as much equity as possible. I did talk to somebody the other day who was asking, I need some more money for my reverse, but my son doesn't want me to do it because my son wants to just take over the house when I pass away. And I said, is your son helping out? And in this case, the son was making the payment. So I said, it makes sense. If your son's making the payment, it's kind of his house because you have that extra money that would normally be going toward a payment that you have to live off of. But I've also been in the same house where, little Devin comes upstairs and says, I don't want my mom and dad to get a reverse mortgage. And I said, are you helping them out with any of the bills? And they're like, no, they're helping me out. And I'm like, well, this is their house. They work for it.
Right.
I did one of these, I don't think my mom minds me talking about this, but, my mom was in a situation, she's a fixed income. She's, got the Social Security, and we looked at the house and how much it was worth, and it was worth enough to say, this might be a good thing because things like the gutters. She wanted to replace her gutters. She had a couple trees that were dead that were going to cost money to fix. And she says, I don't have the money to fix all that. And I hate asking you and your sister for money all the time, or to be able to do extra stuff or to go see family. And so we were able to get her a line of credit. She was able to fix all that. And, she said, I'm going to fix my kitchen up. And she still hasn't done that yet because she likes seeing that money that's in the bank. But she has those options. And my sister and I, I'm like, Mom, my sister and I are doing fine. I'm 57, she's 77, and I hope she lives another 20 years. And if she does, then I'm 77 trying to can't wait for you to die to get the equity out your house, Mom. No. I want you to live your life with quality right now. And this is, especially in our community, I'm down there and there's people who are not doing stuff. And especially when you talk about they're budgeting groceries and they have all this equity. One of the other things that I helped somebody do just not too long ago is they're wanting their grandkids and say, I want to make sure I give something to my grandkids, but I don't want to wait till I die, because that could be 20 years from now. But my grandkids, I said, so why don't we take some of this equity out of your house? And in this case, they have four kids, and so she wanted to take $20,000 each for the 4 grandkids. And she was like, well, what should I use it for? Should I use it for college, or should I use it for, a vehicle or whatever? I said, the best thing you could do is give them down payments. If you give 4 of your grandkids down payments for new houses, then legacy has come out because you've taken your house, and now there's 4 other properties that your family has that they didn't have. That they can now, now they got their down payment, they're starting their life. And, you think if you live another 20 years and you wait, that's 20 years of equity that they don't get in a house, that they can't move and upwardly move and continue. kind of like, our I'll say this, our white folks have been able to do for years. They were able to get houses, and then that house gets turned over to another house, which gets turned over to another house. And, pretty soon there's this legacy of property and, a gift that's being able to give. And the Bible talks about that a lot, is having an inheritance to be able to give to your kids and your kids' kids.
Right.
Where does that come from?
Right.
In our country right now, the way it is, the best investment you could possibly make is in real estate.
My daughter's 49 years old. My understanding is, because this was one of the big questions that I had, if I died, she would have 90 days to live in the house free to decide what she wanted to do, and then she could apply for 90 more days to decide. So she actually has, 180 months, not days, months. So she'd actually have 180 months to decide what she wanted to do with the house. She could either refinance, she could sell it, she could do whatever she wanted to do, but she could live in that house for the next 3 months. What did I say? 90 days.
It's actually 6 months is what you get. The loan's going to come due in 30.
Right.
Then you talk to the servicing, and they'll give you, extension for 6 months. If long as they think you're doing something, you're not just...
You have to be working towards doing. You can't just be sitting there doing nothing. You got to work.
And you can actually get up to a year before the debt comes due. But yeah, sure, the person could live in it. That's happened to me several times where folks have called and, the loved one has passed away. And, they're calling me the next day. The fact, last week, she said, my mother-in-law passed away last night, and I'm worried about them coming to foreclose on this house. And I'm like, ma'am, just get through the grieving process. Take a few weeks. You got some time, and then all just report to the servicing agency that somebody passed away, and then tell them maybe what your intentions are. But right now, you're not going to deal with it, and they're okay with that. That's not.
No, I don't know if you have the answer to this, but when it comes to a trust, if your house is in a reverse mortgage and you set up a trust for your child, what part does the reverse mortgage play in you setting up a trust? Because I understand, let me say this to you all, I've been really studying this because I'm 80 years old and I don't want no surprises. So they told me that it was good to have a will, but I needed a trust also, because if it's a trust, then nobody can question that. And so if I have a trust and my house is in reverse mortgage, how does that work with my trust if my house in my trust goes to my daughter?
That is a great question, Mary, and you have come to the right person, because I have been doing trust and understand trust very well. And so if somebody here that listens to this is just looking for a trust, call me and I'll make sure that you get the understanding and how it works. And so what a will does is it says what your wishes are. And then, of course, our state gets involved, and they say there's a thing called probate, and probate says you can do whatever, this is what we allow you to do. If you have a small estate, people said it doesn't matter. But I've been in a situation a couple times where, the mom or the people who passed away had a will, and then there was a renter who was coming. They showed up to probate, and they said, they said I could have, and they said I could have the house. And for 3 years, that family had to fight with the tenant that made claims on that house because of a will. So what a trust does is a trust eliminates that passing into probate. So if you have a living trust, or in most of the time it's revocable, which means you can make changes to it. You say exactly what your wishes are. Johnny and Billy and Sammy get this much of the house. And when that happens, the executor goes in and says this is. But the actual trust owns the deed. So you change your deed, and it isn't deeded to Merrick McNeil Jones. It's deeded to the Merrick McNeil Jones Trust. And then all that happens is that deed just transfers over, and there's no probate involved. So whether it's a traditional loan or it's a reverse loan, what happens is it just stays in the trust. The person pays, they still have to pay off that loan, but then the house just stays in the trust, and it avoids that thing called probate. And so a trust is a really good thing to have because it allows you to say exactly what you want to happen without any other interference. Because people, you hate to say this, but people get ugly when people pass away.
Right.
I have a neighbor that, her husband passed away, and it was a second marriage, so they had separate kids. And then the kids he passed away, and his kids started pulling furniture out of the house while she still lived there. She had been married for 25 years to this man, and they're saying, Dad wants me to have this. And she's in this shock and just lets him gut her house. And it's like, people just act. Well, so when you have a trust, there's no acting. It said, this is what my wishes are, this is what the will says, this is what's in the trust, this is who gets to disseminate it. And it goes so much smoother. And if you have those assets that are in the trust, the government, the state, anybody else who makes claims on it, they can't touch it.
So you set up trust, right? You set up trust. And so with trust questions, or if you're interested in setting up a trust, how can they call you, Brian?
So my number is 720-682-2223. That's 720-682-2223. And they can just give me a call.
And I have did a lot of study on this trust issue, and this, because I always thought that as long as I had a will, I was fine. But that's not true. And so I've did a lot of investigations about this trust. It is very important. I'm especially talking to our people of color. We sat back, and because we don't understand some things, we're afraid of them. Don't be afraid of finding out about your stuff. You've worked very hard for your stuff. And don't be afraid to find out how you can protect your stuff when you're gone. And also, so that folks won't be fighting over your stuff. I've heard so many people, my family member wanted this, and she wanted this colored casket, and they wanted to put on this color clothes, and blah, blah. Well, you know what? I decided, now this is just me, but I decided I'm going to the funeral home, and I already tell them what color I want to put on. I'm going to tell them what color my casket's going to be. I'm going to tell them everything. My grandfather went as far as putting his date of birth on the tombstone. I didn't like that too well. All we had to do was put the death. I didn't like that too well, but he went that far because it's important. Take away the fight. Because sometimes they get to fighting and they never speak to each other again.
Yes, and here's what I would tell you. Something that's super important. If you don't have the funds or whatever to do a trust right now, a will is better than not having anything at all. So even if you take a piece of paper out, you write what your wishes are on there, you go get it notarized, and you keep it in a safe place, at least your will is in place. So who's ever listened to this right now, if you don't have anything at all, at least go write a will, take it over to UPS, they notarize it for free, at least they used to, and get that thing notarized and done, because at least, and then work on, let's talk about a trust. And when you have some assets and you want things to go, and you want the medical as well, because medical is the other issue on the trust that usually is put in there. Medical durable powers of attorney, like who's going to make decisions on, things like, if you're brain dead or something like that, and do you want them to keep you alive or do you want them to pull the plug? All that stuff can be done. I'm a chaplain over at the Spalding Rehabilitation Center. And so, we use a thing called the 5 wishes that I try to make sure that every patient has. What are your wishes that you want to do? And then once you start accumulating assets, and if you have a home, you have assets. So I think a trust is super, super important, especially if you have kids and heirs, because you want to take care of all that stuff first.
So, Brian, is a trust really expensive? Is it according to your income? How does that work?
Well, usually they range somewhere between, if somebody's preparing it for you and put it together for you, somewhere around $1,000 is, I've seen some where I go online and I go, oh man, that thing's $1,500 or something like that. It can get, if somebody has a lot of assets, then it's like if I got 9 properties, it's not going to be $1,000.
Right.
But just for somebody who's just, getting going, it's somewhere, in that $1,000 range, it's going to be. for them to make sure that everything is protected. But it's $1,000. It is so
worth it. Yeah.
To be able to do.
Yeah. Well, as you can see, we started out with reverse mortgages, and we're talking about so many different things that are so important in our life, because we're living today, but tomorrow we never know. In the last 2 weeks, we've had 3 church members that have passed away. One was 28. One was like 35, and the other one was in his 50s. So there is no age limit on when we're going to leave here, and so we must prepare. We must prepare. And for you all that have children, when my daughter was a year old, I took out insurance policies for her. And I still have them same insurance policies. And boy, they're worth a whole bunch now. You know what I mean? She's 49. They're worth a whole bunch now. So even for you young people who have children, you need to take out all kind of insurance. They got all kind of insurance now. Insurance to take care of our house things when they break, insurance to take care of our cars when they break, insurance to help you get kids in school when they get to college level. They got all kind of insurance. Stop sitting back and letting this information go by you. Find out about the information. It doesn't cost anything to find out the information.
And Brian, let me ask you this. On the reverse mortgage, say I'm interested. What steps do I have to take? I was reading that I'm required by law to speak to a counselor. Would you be the counselor?
And so that is an incredible question, and I'm so glad that you asked that. I will not be the counselor. And so what happens is they want to make sure, as you guys know what happened in 2008, a whole bunch of people got taken advantage of in the mortgage industry. And so a whole bunch of rules got put in place to safeguard the consumers, especially seniors. And so somebody would contact me first and say, do I even qualify? And so I'll sit down with them and I'll say, this is how much you can get. We can get you an equity line of credit, or we can get you some cash. Part of it is you can't use all the cash in the first year because we don't want you to go to a casino and lose it all. And that's happened before. And then so once we find out if you qualify, we find out how much you have available to you. Then the next thing I do is I send somebody to a counselor, and they're HUD approved, FHA approved counselors that will say the same thing that I did if I did my job right. And so they will make sure they understand the loan, they'll understand how it works, they understand how the balance continues to go up, they understand every single part of the loan. And it's a phone call. It's not like they have to go down somewhere. It's 20, 30-minute phone call. Sometimes if they have lots of questions, it's a little bit longer. But you are absolutely right, that counseling, I'm glad that they do it, because now it's a third party that's not me that allows it to do it. And depending on the income, they usually, counselors charge anywhere from $125 to $150 to have that counseling done. But depending on the residents, and I'd say most of the people that I do with, there are programs that allow that to be free. So it doesn't cost any money to the person who's getting the counseling.
And I might say that I went through the counseling part of it, and I wanted to see and I tell you, this man that I talked to, I was on the phone with him a long time. I asked him so many questions, and he answered my questions. And when he answered my questions, if I didn't understand his answer, I asked him some more questions, because his job is to see that the seniors understand what they're signing. And I think that's excellent that they put that in place.
Yes, so important.
Yeah, the one really nice thing is once you've done your reverse mortgage, you don't have to make a payment. Now, you're more than welcome to make a payment. If you want to keep, like somebody says, well, I don't want that balance to go up. You could make the interest-only payment if you wanted to, and the balance would never go up. But you don't have to. So if something happens, one of the biggest things that also my mom said, if we do this, do not put me in a home. And I'm like, Mom, I'm not planning on putting you in a home. She said, use some of this money, to be able to pay for in-home care.
Yes.
And also, what's really kind of cool is so Medicaid says you can only have so much money or assets. Well, if this money is sitting in a line of credit, it's part of your mortgage. And so it doesn't count, and you can still qualify for the Medicaid to get the help with the in-home care. So not only does she have some money that the house is helping her to stay in the house, she can qualify for some government programs at the same time. And so she can age at home instead of the expense of some of these medical facilities are just impossible. And it takes if somebody's all their assets that they were going to be able to give as an inheritance end up going into in-home care. And so there's a whole thing that the reverse mortgage does that allows person to stay at home.
Yes.
One of my friends in Cleveland just went through that. Her son is a pastor of a church there in Cleveland, and she was a beautiful woman of God, and she got sick. And she just did not want to. She had lived a real full life and did not want to go into a nursing home ever. And of course, her son, only son, did not want her to go into the nursing home. And so they brought her home. And so she was in the hospital, and the hospital made a mistake. They thought she was going to die, but God said not so. So they didn't turn her like they were supposed to. So there was a sore that turned into where you could actually see her bone. They took her out of that hospital, of course, and they didn't know it until they got her home and seen it. But she even lived way after that. It was just amazing to watch this woman, but she had really did a lot of work for God. But her son was able to take good care of her. People came in, like you said. They came in and they took care of her, and they financially, she had fixed it so that they could do that. And until the day she died, that happened. So all of these things are important that we're talking about today, and don't let it past you.
Yes.
Call and get some information. Give them again your name, number, Brian, and I want Sandy, please give them your information too.
Absolutely. My number is 720-682-2223. That's 720-682-2223. And for the folks that are young, you say, well, this doesn't matter, but most of you guys have parents and you have grandparents, and it's part of a conversation that you should be having about wealth, because one of the things that we don't do in our community is talk about money, and that has to stop. We need to talk about it. It needs to be part of the dinner conversation, the party conversation. We're all so scared that we're not going to tell nobody anything until something happens, and then we can't do anything that could have been done 5 years ago, 10 years ago, that could have prevented what we're just dealing with.
Absolutely.
That's right.
And they're bringing babies into this world. You young, you bringing babies into this world. You're responsible for them babies. You're responsible to see that they are secure. You're responsible for taking care of them, passing on information to them. If you don't have the information, how are you going to pass it on to them? You're responsible when you bring these babies into the world. I got to say that.
And young people, this isn't just about the reverse mortgage. Brian, you deal with all mortgages, correct?
I do.
Okay, so if you're just a young couple starting out, then give Brian a call.
Yeah, please do. There are so many programs that right now have down payment assistance. And if you qualify, and some of the banks, I was talking to somebody over at Key Bank the other day, and First Bank, they both have programs for African American families specifically that have a 100% down payment financing.
Oh my God, listen to that, young people, listen to that. Grandparents, great-grandparents, whatever, tell your young people about that.
Yes.
Call Brian and get the information on it.
Yes. If you've listened to this program, you have more questions, and you want to talk to us about the program specifically, give me a call at 303-481-1800, extension 171. If you would like to be a guest on our program, once again, 303-481-1800, extension 171. And you can email me at Sandy, SANDYE, at CrawfordBroadcasting.com. Dr. Mary, your email?
My email, mmcneiljones17 dot C like in cat, A, T like in Tom, C like in cat, at gmail.com.
Brian, it has been just a joy and honor to have you as our special guest today. Do you have any parting words?
Yeah, my parting words would be find out the information. Don't just listen to whoever else is out there saying stuff and putting stuff in your head, because there's all kind of folks that have misinformation that are out there. And so whether you want to research it online or you want to give me a call, please give me a call and we can talk about it. We can see what is the best way to help your family the way that it needs to be helped. So I appreciate being on this show with you guys. This is amazing. I didn't even, I knew you guys existed, but to be on here and to come on and to talk, it's just been a pleasure, and you ladies are amazing. So thank you.
Well, we're glad to have you. We're glad to have you. Also, you guys, there's a lot of new minority-owned restaurants opening up in the city, and we want to let you know about those restaurants. Be sure and listen to us, because we'll be getting the information and addresses on restaurants that you can go to that have the kind of food that you like. You know what I mean?
That's right. Some good old soul food. Let's just say it like it is. Thank you, Brian. We're happy to have you here.
Thank you very much. I appreciate it.
You've been listening to Outlook on Colorado, a conversation around the table with Dr. Mary McNeil-Jones and Sandy Thompson. This has been a public affairs presentation on this Crawford Broadcasting Station.